KEI Industries is one stock that remains in focus. It's down around 8% in trade, and one of the major reasons behind this is the more than 70 basis points decline when it comes to the EBITDA margins, both on Q-on-Q and YY basis. To explain this and to give the outlook, we have Anil Gupta, the Chairman and Managing Director of KEI Industries, joining us. Sir, the margins were down here in the second quarter, around 70 basis points on both Q-on-Q and YY basis, but do you expect to reach the 12% margin by FY26? What are those factors that will aid this margin expansion?
See, we can't give such a long range guidance. We have already guided that this year we expect to do around 10.5 to 11% overall EBITDA in the full year. So our guidance remains same. If we are able to do better, we will definitely aim.
Okay, so that's a word coming in as far as margin is concerned, and the street is clearly disappointed around that. I mean, take a look at the stock price right now. It's down almost 8%. So maybe a bit more clarity is what people would like on that. But nonetheless, talk to us about the top line growth going forward, because at least that was the bit that did well in this quarter. What kind of growth should we pencil in going forward, sir?
We have already given a guidance of a top line growth of 15 to 17% in overall in the full financial year, and we are on track.
And what exactly will be the growth driver here?
This growth is coming from increased sales from the domestic markets and export markets for all our products.
And sir, what has been the volume growth for wires and cables in the second quarter, and what is the outlook?
Volume growth has been 14% in first 6 months, and I believe that it is likely to remain around 14 to 15% in the second half as well.
Okay, and what about the outlook on order inflows? Because so far this year that has been steady. Going forward, which segments you believe will contribute to the maximum in terms of the order inflows?
See, orders are coming from all our customers, exist from domestic as well as exports, and at present the order booking is around 3,850 crore. And it is likely to remain in the same level, especially in the retail side. We don't add any order booking in our these figures, because the orders comes and executed within 10 to 15 days. So they are not the part of the order book. The order book is reflecting only B2B sales.
And so, how has been the export market? What has been the performance been like this quarter, and what is the demand outlook going forward? Are you planning to diversify to newer geographies as well?
In the first half, our export are almost similar to what we had achieved last year in the same period. But we expect to have a growth of around 20 to 25% in the exports in the full financial year. And so far as geographies are concerned, we have already diversified into United States, Europe, and we are going to focus on these markets.
Okay, but this 2,000 crore fundraise that you are doing, talk to me about the utilization. This is largely going to be some greenfield capacity add, or you're doing brownfield as well?
The funds will be used for CapEx, which is coming up, which is for our greenfield project coming up at Sanand near Ahmedabad. And the overall CapEx requirement is around 18 to 1900 crore rupees, which will be spent in this financial year and as well as next financial year. And the major requirement is for CapEx purposes.
And lastly, before we let you go, sir, are you planning to further strengthen or expand the dealer network?
We have already strengthened our dealer network. At the moment, we have around 2,083 dealers working for us, and close to 55% of the company sale has come from our dealer network in this last 6 months.
Okay, on that note, we'll let you go. Thanks so much for making time and speaking with us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.